And welcome to the Max India Limited Q1FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajat Mehta, Managing Director, Max India Limited. Thank you, and over to you, sir.
Thank you. Good evening, everybody. On behalf of Max India Limited, a very warm welcome to everyone on this Q1FY23 earnings call. Some of you may be joining the call for the first time. I have with me my two colleagues, Ajay Agarwal, who is the CFO for Antara Senior Living, as well as the Head of Investor Relations for the company, and Mr. Ojasvi Ghoshal, who is the CFO for Antara Assisted Care Services, and SGA people, who are our Investor Relations advisors. Before I go into the results of Q1, a quick update on the capital reduction scheme. I'm sure it's on top of mind for many of you. After a long wait, we did receive the NCLT approval sanctioning the capital reduction scheme on 30th June 2022. The record date we've already published. It's 27th July. The offers have gone to all the shareholders. The exit offer period opens today and closes on 23rd August as per the statutory requirement of 10 working days. We expect the transaction will be closed within September 22. So with this, one more commitment that we had made to our shareholders, many years back is now, coming through. I must reiterate, this is not a compulsory exit for public shareholders. It's just an opportunity for those who may not wish to participate in the next phase of growth. It's a call that they have to make. I would very much wish that all of you remain with us as we go through a very exciting phase, of our growth journey on senior living. But it's a call that shareholders need to make. We are ready with our funds as committed to be able to buy back those shares. We have enough liquidity not only to support the buyback but also support our growth aspirations. We have a treasury corpus of over 300 crores, out of which 178 crores is earmarked for Antara Assisted Care Services and 75 crores for Antara Senior Living. And the balance is surplus capital to accelerate growth. Now, shifting on to operations, a quick overview of what happened in the quarter. As I keep on saying in every call, Max has had a history of having the ability to spot early trends. We spotted insurance way back in 2000, healthcare in 2004, and health insurance in 2008. All of them, are large, well-recognized brands in their own right, in the country. Similarly, the senior care trend was spotted very early in 2010. It continues to be a very large market in India, though fragmented in the nascent stage, about $10 to $15 billion across various pools, around residences for seniors, around assisted living, around care at home, around medical equipment. And given a very, very unique, lineage and legacy of healthcare infrastructure, hospitality, we have the ability to bring together all these competencies to create a true integrated care ecosystem for seniors. And we do believe that our theory of the Max Group, coupled with that Antara, will help us, make good strides and good progress in this huge market opportunity. Our focus continues to be the 4 million customers in the 3 clusters of North, West, and South, income segment of 1.5 million per annum. Currently, we are already in NCR, and we are aggressively now pursuing to enter, the Southern cluster first and then the Western cluster. There are 4 strategic verticals we had identified, for our growth. First one is residences for seniors. These are intended for seniors who are independent, healthy, would want to live in a community of like-minded people with safety, security, and promise of healthcare services. You can choose a resort-like stay in Dehradun or in Noida. Going forward, Gurgaon and many other such locations where we'll, operationalize more and more communities. Then under Antara Assisted Care Services, there are 3 verticals. care homes, or what is popularly called assisted living, outside India. These are rented accommodations, giving you an option of single, double, suite depending on your need. They are meant for 3 or 4 kinds of people. One, elderly people who can't be maintained at home and need help for the daily chores of let's say mobility, of feeding, monitoring, bathing, etc. Or seniors have gone through a very intense medical episode like a cardiac bypass surgery, a stroke, knee transplant, etc., and they need some months of rehabilitation. There are also, patients who come from outside the country or outside the city and need, pre and post surgical care. These care homes are meant for those people. A variant of this is memory care homes, which we are soon about to launch the first one of its kind offering in Gurgaon, in NCR. These are meant for people with Alzheimer's, Parkinson's, dementia, and these are specifically, structured for them in terms of infrastructure. There are different kind of, caregivers who are more qualified. So this is the first vertical of what we call as care homes. The second one is care at home, more popularly called as home care services, which includes critical care at home, nursing care, patient giver, pathology, X-ray, physiotherapy. We have the ability to provide all these services in the comfort, of the seniors' homes. The third vertical is patient aids or medical equipment. We call it Antara Medcare. These are basically, equipments that help the seniors lead a better quality of life and helps them, aid their recovery. These are from orthotic products like, supports for the back, knee, neck, mobility like walking sticks, walkers, wheelchairs, respiratory aids, bathroom accessories, all that helps the seniors, lead a comfortable life. We had commenced our journey with the first, residences for seniors project in Dehradun. That has done quite well. In fact, we only have 14 units left if I look at the first quarter, and some units have also been sold in July. And the project has also achieved a monthly sales collection of 14 crores in Q1FY23. Happy to report the project is debt free and continues to be cash and PBT positive. It's a vibrant community with more than 100 residents enjoying the facilities and records a consistent resident satisfaction score of 90% plus. And one more vindication of the product is that 50% of our sales are coming through resident referrals. These are great testimony both for the brand and the quality of services being offered. The learning of Dehradun, which was our first, product, also helped us establish the brand. We leveraged the learning for a second community in Noida, which is more condominium style, G plus 30, total about 540 odd units in 2 phases, where it's a joint development model. There is a partner who has contributed the land and the project is being developed in an SPV. Again, happy to report, we launched this somewhere in Jan to March of 20 in the thick of, COVID wave 1. They've already sold 278 of the 340 units in phase 1. Construction of this phase in full swing. We have completed, 6th floor, 4th floor, and 3rd floor respectively for the first 3 towers that we are building. And the possession is expected by early 2025, and the project is currently on track. We have collected about 123 crores till June 22 with a monthly sales collection of 14 crores in Q1 FY23. Work has already been initiated for phase 2 since we're running out of inventory now in phase 1. And hopefully in the next few months, probably last quarter of this year, we'll be able to, consider launching, that as well. The company is also progressing very well for its 3rd community now, which is going to be in Gurgaon, in partnership with Max Estates Limited, where, it's a joint development once again, where they'll be our construction partners and they're contributing in terms of, a land parcel. And our core competence for helping them design, selling and operate is what will come into play. And we're also aggressively scouting for opportunities in Bangalore and Pune. So that's the first, vertical of residences for seniors. In Antara Assisted Care Services, we have served about 10,000 patients since inception. We are now the largest player in NCR in terms of beds for care homes or assisted living. Already have 90 operational beds and 60 beds in pipeline. And therefore, by the end of H1 FY23, we'll have about 150 beds operational. And this is in a period of 2 years, despite the disruption that we have faced, due to COVID. We're also pleased to announce that the building blocks are in place for the launch of one of its kind memory care home in Gurgaon in Q2FY23. As I said earlier, the infrastructure is a little different. In terms of safety and security, for people who stay there, this is meant for people who have dementia, Alzheimer's, or Parkinson's. We have, counselors and psychiatrists who are caregivers. Everybody is trained for geriatric care and dementia care. And there are specific therapies that will be offered, from speech to swallow to gait management, to make sure that we're able to provide a life of respect and dignity, for people who have mental disorders. This will be ready for launch probably, by September mid 22. It will be launched as well. We were the first ones to launch a mobile health checkup van. It is a van which is fully fitted out to do executive health checkup for seniors at their doorstep. Seniors need not now go to hospitals or primary healthcare centers for their checkups, and given the pandemic situation, it's advisable they are able to do that in the convenience of their home. We have an X-ray facility, a TMT, an ECG, a doctor consult, a blood work, all can be done without the seniors having to go anywhere. On the medical equipment side, all the building blocks are in place, both for sales and rental capabilities. We have about 1,100 SKUs, a very robust backend in terms of inventory management, warehousing, and logistics. And, all our processes, whether it's clinical, non-clinical, are quite robust. They are in place. They have been, we have sought help from various clinicians to make sure that they are robust. And, gives me great pleasure to inform that our care at home services, we received the QAI certification, which is a stamp of, quality. And we are the youngest organization in India to receive that. Our customer satisfaction scores are consistently above 90%, yet another vindication of our commitment to excellence and quality. I must say that the sector has developed a little faster than what I had expected in the last 2 years. We have seen a lot of new entrants stepping with various senior care models, some with remote monitoring capabilities, some leveraging AI, some with concierge services, some in residences for seniors. And there's also heightened interest, from investors. We have seen 2 or 3 investors, putting in, reasonable sums of money in the sector. And we're also seeing very active government participation to make sure the sector is developed in the right way, with the right policies, tax structures, and certifications in place. And this augurs well because India, as you know, is a fast-changing demographic, and therefore we need to put the systems in place. In the end, I'll say that we are well on our way of becoming a loved and trusted brand for seniors, which was our vision, so that we're able to cater to the life care, lifestyle, wellness, and care needs of seniors. This was about what has happened, in Q1FY23. Now, to give you a quick, financial numbers, the company's consolidated EBITDA turned positive to 1.3 crores in Q1FY23 against a loss of 3.4 crores same period last year. This is on the back of improvement in profitability of the Doon project in the current year, and Max still reported losses in previous year. That company, as you know, has been divested. Our consolidated revenue post-divestment of Max and COVID normalization is about 46 crores in Q1FY23, down by 20%, obviously, because one company no longer in our portfolio and we have normalized for COVID revenues. The company continues to maintain a very, very robust balance sheet position with consolidated net worth of 633 crores, well capitalized with 550 crores of assets, a treasury corpus of 392 crores, and other monetizable assets of 160 crores to support capital reduction and fuel Antara's growth plans. In terms of vertical performance, revenues marginally down 9% on the residences for seniors because due to a very high lease registration in Q1 FY22, which was a carry forward for FY21 because we couldn't register many leases due to COVID. But the project, as I said, has turned positive, 0.2 crores in Q1 FY23 against a loss of 1.4 crores same period last year. In terms of Antara Assisted Care, the healthy growth continues. The care home net revenue has risen by 26% on a year-on-year basis to 1.3 crores in QY FY23. The revenue growth is on the back of improvement in occupancy, which has increased 83% on a year-on-year basis. Gurgaon Care Home achieved a break-even within 20 months of operations. If you recall, I have been saying that every care home within 2 years should break even. Gurgaon has done that, 4 months in advance. At 45% occupancy, a reported net revenue of 0.83 crores for Q1FY23 with 19 patients as on June 22, including 12 long-stay patients, which then, ensure sustainability of revenue. We are really elated to report that the Gurgaon Care Home has reported positive contribution margin of 5% in Q1FY23, up from minus 25% in Q1FY22. The average occupancy has more than doubled from 25% same period last year to 52% now. We have witnessed a very high conversion. So all the customers who come and see the property, about 50% of them convert. Also, the renewals are very healthy, 50%. Again, these are a big thumbs up we are receiving from customers on the product. And we're also able to do a much higher cross-sell of services like nursing, pathology, diagnostics, etc. Our care at home net revenue stood at about 1.2 crores in QY FY23, going by 20% year on year. More than 80% of the revenue comes from critical care, nursing, and attendant services. The Medicare revenue was 0.7 crores, excluding COVID-led revenue from previous quarter. This means a 1.6x growth year on year. Just to sum, our endeavor has been to now achieve higher growth, a sharp focus on all 4 verticals. We have enough liquidity in the balance sheet to fund this growth. We aspire to be a multi-locational company over the next 5 to 7 years with 8 to 10 communities in residences and a bed capacity of around 2,000 beds in care home, memory care home, a very robust care at home channel. We're also exploring a digital channel for our Medcare equipment and a white labeling opportunity to boost margins. Our endeavor is to continue to deliver a resilient business performance, make the right commitment and live up to those commitments. We want to deepen our product portfolio, increase the clinical differentiation, expand our footprint across various geographies. And going forward, hopefully the sector should also see significant tailwinds because the demographics are changing. Unfortunately, disease burden is changing. A large cohort of financially independent and educated senior citizens have growing healthcare and evolving lifestyle needs, a higher incidence of nuclear families, so a need to really put together a very strong integrated care ecosystem for seniors. With our core competencies and a strong pipeline of upcoming projects, Antara is quite well placed to meet the increasing demand of high quality senior care. Our presence in all the verticals provides a very strong foundation, and we're quite confident that we'll be able to, record sustainable results in the future. So that's all I have from my side, ladies and gentlemen. Thank you very much for joining the call, and happy to answer any questions that you might have.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Sajjal Kapoor, an investor. Please go ahead.
Yeah, hi. Thanks for taking my question. Am I audible?
Yes, please go ahead, Sajjal.
Yeah, thank you. So just a couple of questions. First up, regarding our care at home segment, given the fact that the regulatory framework and policies in India are either not well defined in this space or fuzzy at best, don't you think there is a risk to the mental and physical well-being of our staff who go into someone's property as part of our care at home services because of the weak or missing regulatory framework and policies in India currently? Thank you.
Yeah. So, the regulatory framework in terms of, let's say, certification of services is just being put into place. These are regular, nursing and caregivers who also work in hospitals. So it's not that we are creating a new cadre of caregivers. These are caregivers who provide the care in a hospital, environment. Same people are going across to the homes. The doctors are giving them cover in case of any critical care needs. So in one sense, the ecosystem exists, but in hospitals, the same ecosystem is in different form being provided in the homes of seniors. As far as security of the caregiver is concerned, you're right. It's a very tricky subject and sensitive thing to handle in India. However, through the use of various mechanisms of customer education and constant visits by supervisors at home to check on both the quality of service being provided and the welfare of the caregiver, so far India has been able to navigate this. So I haven't personally heard of very many incidents that there's a security issue or a safety issue to do with caregivers. One has to be watchful, all the time. Therefore, we also do a fair bit of, let's say, selection of customers in terms of the need and what they need. That also is done by the supervisor before we provide the service. But I must say that this trend of services going home is only going to increase, as it has happened, in other countries outside India. More and more services are going home, whether it's dialysis. Some people are even talking about basic dental, opthal, and now even chemotherapy at home. So it's a trend that will continue. It will evolve over a period of time. So one has to be watchful, right? But it's really a trend which one has to, be a part of because it's a large opportunity.
Absolutely, Rajit. I fully appreciate the scale of the opportunity unfolding because, as you said during the opening statement, is the demographics and the age is something that will continue to catch up, and the disease and the population metrics is not going to go down in a country like India. So yeah, thanks for that detailed response. Just another question, or second one that I have is around our Medcare and ambulatory services. Would you mind just giving us some sort of a better perspective or color around, what gives us the right to thrive in these segments and your best 3 to 5 year outlook, please? Thank you.
We don't offer ambulatory services. We offer, as I said, care at home services. And in our care homes, there is an emergency backup tie-up we have in case of any episode with the nearby ambulance providers and hospitals. So if that's your question, we don't provide ambulatory services actually.
Right. Pardon my ignorance because I'm still kind of learning the business and my due diligence kind of hinted that, that's one area that we potentially may be looking at. But yeah, that's absolutely fine. I'm still learning about the business, obviously. Medcare, so I think where we currently stand is we are sort of procuring, so it's kind of a trading business for us currently. And the next stage of evolution would be where we'll be start white labeling. We'll be presenting the end product in our own brand, and we have got this two models, right? The rental and the outright sale. What is the sort of medium-term outlook in this segment once we get the branding established? Is there a longer-term plan to do a backward manufacturing type setup, or are we comfortable in terms of the quality of the product and the kind of different products that we need, and we have got the vendor network is well established, so we are just happy to just put our sticker and operate in that model over a medium to longer term, maybe? Got it.
So Medcare, as I said, we are playing in the segment which are essentially patient aids, which help people to recover and lead a comfortable life, from respiratory orthotics to bathroom accessories. Currently, it's number 3 on our priority list. We have an offline workforce in NCR, but we are actively pursuing 2 things. One, we are about to explore listing on a platform. Because that seems to be more efficient in terms of the sales output, and we will definitely look at private labeling white labeling once we have reasonable volumes to be able to push the margins. We have identified about 10 SKU categories which are quite relevant in terms of volumes that we see on various platforms, and the next quarter we should be able to at least list a few of them, watch the experience while we have the logistics and warehousing capabilities both for sales and rental. And once we see the volumes coming through is when we'll approach white labeling, certainly on the card. So I would say in the next 6 to 9 months, both of these things should happen.
Thanks so much, Rajat, for all those responses. I'll join back the queue. Thank you.
You're welcome.
Thank you. We have the next question from the line of Ulhas Paymaster, an investor. Please go ahead.
Yeah, good afternoon. I have one question. Now, you have been talking for last 2 years that you are expecting a turnover of about 500 crores over the next 4 to 5 years. Now, if you see the trajectory of your turnover growth in last 1 or 2 years, there is hardly any turnover worth counting. So can you just explain to me how you are planning to achieve a turnover of 500 crores from the current turnover of hardly about 10 to 15 crores in care at home and care home facilities?
Yeah, largely our turnover will be more than the numbers you're talking about this year itself. Unfortunately, 2 years have been disrupted by COVID, where we had no access to medical value travel. There was hardly any access to hospitals. And we also had to turn our focus towards COVID services. So that disruption, unfortunately, we didn't see coming, 2 years back. And it has taken away at least 1 year and a half, 18 months away from us. So scale-up has been a little slow. And we also pulled back, not wanting to burn too much of capital when we didn't see the demand coming through. However, things are now slowly getting back on track. This quarter has gone up very well. If you see our growth quarter on quarter, it's quite healthy. So I would say our ambition of 500 over the next 5 to 7 years, may have got shifted a little bit due to unforeseen circumstances. But once, and as I said, the care home unit economics have been established very clearly. That was our assumption. Some assumptions have gone better than what we had planned. And now the scale-up should start all across the verticals. So if you look at Noida, which has done very well, you look at Gurgaon, then Bangalore, then Pune. So a combination of the 4 verticals certainly should be somewhere near that number, in the next 5 to 7 years.
But overall, if you see the progress which is being made by your competitors, don't you think that you are going to lose the first mover advantage if the competition is able to come up with their projects faster than yours?
So if you're referring to residences for seniors, I would say on an overall basis, our ambition of creating an ecosystem which comprises residences, care homes, care at home, medcare, nobody else is playing that game at all. Nobody is creating an integrated care ecosystem. We are the largest provider of assisted living beds in NCR already. As I said, 90 beds operational, 60 more in sight by H1 of 23. Nobody else is even near that number at this point of time. And once we have done that, we are stepping outside the NCR now. So I don't see that danger at all. We are actually far ahead of many others who have been in the game a little longer than us. If you're only comparing the residences vertical, obviously there are a few people who are larger, right? But I'm looking at totality of all the 4 verticals.
Even at care at home, there are other companies like Daburs or Mahindra. They are also going pretty fast. Don't you think so?
Sir, Dabur, etc. and Portia, they are competitors who have been there for 10 years, sir. We are about 2 years for the new services, 2 years old. And if I compare the NCR volumes that we have, and all these are not published numbers, so I can't comment, but they're quite comparable to names that you mentioned within NCR. Of course, they are in, X number of cities more, which we are not. But within NCR in 2 years, they've been able to come within very close distance of what numbers they are reporting on an annual basis. So I'm quite confident the next 3 or 4 years you'll see, faster growth from our side. I mean, COVID notwithstanding, hopefully, I wish, it remains the way it is in terms of endemic and never comes, another disruption for us. But I see this growth now, being accelerated in the next few years.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Keval Ashar from DSP Investment Managers. Please go ahead.
Thanks for the opportunity. A few questions from my side, sir. First is, sir, what is the market size for care homes in India?
The total opportunity, as estimated by McKinsey in 2019, was of 1.1 billion for assisted living in India.
Got it, sir. Sir, any global leaders in this market which are there in similar industry as ours? just for reference for investors? That what is the opportunity we can reach?
There are quite big players in US, UK, as well as in Japan. But there the advantage in US is the payers are very different. It's an insurer-led market, in that sense. So there are players outside India, but nobody in India of that scale and size.
Exactly, sir. So if you can just give a name of 1 to 2 players in some mature markets like US and Japan, just for the reference.
There is Genesis, in US. There is Continental in US. There's 2 names I remember. There is Care Homes UK in UK.
Got it. So what would be the ROICs that we would be making on care homes? When you plan to set up a care home, what are the ROICs in your estimates?
Yeah. So we'd expected that care home at a unit level will produce between 18 to 21% contribution margin at a care home level, and do a EBITDA in the 4th, 5th year of between 12 to 15%. Ojay, am I right in my assumptions?
Yes, sir, that's correct.
Understood, sir. And so last question from my side. So currently what I'm seeing is you have 4 care homes in Delhi NCR and 2 in Gurgaon. Sir, how many care homes do we plan in the next 3 years?
So our plan is to put up about 2,000 beds in the next 5 years. So we'll complete, as I said, about 150 beds by H123 in NCR, and then step out. Don't want to project any numbers for next 2-3 years, not right, but that's the plan, 2,000 beds in the next 5 years or so.
Sir, is it 2,000 or 3,000? I didn't get the
2,000.
Okay, got it, sir. Thank you so much and all the best.
Thank you.
Thank you. We have the next question from the line of Chaitanya Deepak Shah from Silverlight Capital. Please go ahead.
Hi, good evening, sir, and thank you for taking my question. So my question was on the assisted care vertical. Actually, I'm sure you would know Porsche has come up with, they filed the IPO prospectus with SEBI, and I was just having a look at a few of the numbers that they've reported, and just a few numbers in the industry. Now, they've been in this business since 10 years. And they're doing revenues of 140 crores, and they've burned through almost 800 crores. They have a negative net worth of close to 800 crores today. So I just wanted to understand what gives you the confidence that these players have been there for almost 10 years, and they've reached the size of just 140 crores. What gives you that confidence that you'll be able to reach that 500 crore figure in 5 to 6 years, and you'll be profitable?
The companies we're mentioning actually are first of all not senior focused, and they are into only one vertical, which is care at home. We are 4 verticals: residences for seniors, assisted living, memory care homes, care at home, and medical equipment. So first of all, we are different. Our target segment is different. Our focus is different. Our business model is different. They are only into care at home. That's one. Secondly, they started very early, and therefore they have borne the brunt of burning capital to establish the category. So for that reason, it's not actually comparable. We are also a real estate enabled play. They are a pure services play. So several reasons, because of which our model is quite different. So it's difficult to compare and say where will our growth be 5-10 years from now, because it's a very different model.
So if I understand correctly, are you saying that the whole ecosystem that you're trying to create in terms of care homes and residences, you think this model sort of works better than just having a service-focused vertical?
That's our belief, because the needs are quite distinct and different for seniors in terms of lifestyle and lifestyle. And so far we have been watching the sector very carefully. As I said, it's progressed a little better than what I had expected. Also, there was no ecosystem in play in senior care 4-5 years back, slowly coming into play. So if you look at whether it's chronic healthcare, remote healthcare, care at home, travel portal for seniors, assisted living, memory care. So slowly you are seeing players coming in each segment, which means the sector has now started to slowly take shape, right? And that's what our hypothesis is, that given the macroeconomic factors of both the population, changing demographics from 8% seniors to 20%, of the disease burden, 40% of seniors reporting cardiac issues, 17% having dementia, a much higher incidence, now of people living alone, and therefore nuclear families coming into play. The government starting to pay attention. Already there's a portal for second innings employment for seniors. There's an elder care helpline launch, with Tata Trust. There's a portal the government has set up for incenting startups to in senior care. About 100 crores of corpus has been set aside. So all these are indications now that the sector is getting attention, and therefore we believe in the next few years we should see significant change in terms of growth trajectories for people.
Okay, all right, that was helpful. My second question is regarding the care homes. Now, while I appreciate that the Gurgaon care home is doing pretty well and you've reached break-even, but I think the GK2 and the Gurgaon 2 that you've listed in the presentation, they still are at a pretty low occupancy. So just wanted to understand what was the motivation behind opening one more care home, and why are these occupancies not picking up? I was under the assumption that international medical travel would also have started by now. So just your thoughts on that.
Yeah, sure. So as I said, we had assumed that the Gurgaon, each care home should break even in 2 years. Gurgaon has done that, 1 quarter in advance. GK also is trending the same way. The occupancy you're seeing in the first quarter, there's been a significant improvement, which I'll report in the second quarter, which has happened already in both the care homes. So they're going as per assumption. We also saw that the revenues that we'd expected in terms of pricing per day, we had to revise downward given the pandemic situation, but then we also optimized costs. So earlier we thought the break-even will come at 70% occupancy. Now it has come at 45% occupancy. And the Gurgaon care home has been contribution positive for the last few months, right? And the occupancies are going up steadily. Yes, medical value travel has started. So our strategy was first to create supply, because it's not that easy to create supply either, to be able to find compliant infrastructures where you have all the fire NOCs, the registrations under various laws, the biomedical waste license we have to take. So it took us time to create the supply. We also want to take the opportunity in the pandemic-induced situation of low rentals, which were available. So it was an opportunistic play that we said, okay, let's go and create the supply, and then we'll push ahead on occupancy and sales. So that's the judgment call we took. So supply will be in place by the end of the year. And now we are seeing the occupancy going steadily up in all the care homes actually, much more in Gurgaon. The other advantage Gurgaon has had is that a large proportion of people staying there are long stay patients now, which means that the revenues are more or less now on a monthly run rate basis sustainable, and GK will follow suit. So that was a strategy to create a supply first, given the time it takes and the opportunity presented by the pandemic situation of lower rentals. And now the focus is on making sure that we're able to increase the occupancy and then step into other geographies.
Okay, all right. So the model that you had pivoted, which you mentioned in the last quarter about just leasing out the care homes and not having that ownership yourself. Do you think that started working? I mean, are you happy with that model right now?
So actually, we never owned the care home. What we done very earlier was taken the full building, about 30-35 rooms, and we are operating all the services ourselves, from F&B to housekeeping to nursing to physiotherapy to doctors. What we did in the pandemic situation was found a lighter model, where we took 10-15 rooms near hospitals, particularly for pre and post surgical care, to be able to take that advantage, which we have done. So those models are now up near various hospitals in NCR, and GK and Gurgaon are full suite, where all the services are run by us at this point of time. So yeah, the operator model, or lighter model as we call it, in terms of capex, where somebody else runs the F&B and housekeeping, we provide the medical services. That has also started to show some results. Too early for me to comment. The supply came up in the last few months only. We'll watch both the models, but our preference is to make sure we have minimum 20 rooms wherever we go, starting with 10 then 20, but a lighter capex model for short stay and a little more, full service model for long stay is what we think works. So we never owned big properties. Both are still rental models.
Right. Sorry, there was an issue in my understanding. I just have one last question. This is regarding the slide number 21 in your presentation. It's about the Antara 2.0, where it's mentioned that the invested capital is 228 crores. So just wanted a breakup of this 228 crores. Of it also mentioned a land parcel. So if I can just get a breakup from it, that would be great.
Sure. Ajay, you want to take that? Ajay, you on the line?
Yes, sir.
Some question on slide number 21 with 228 crores breakup.
Yes, sir. So basically, this is the investment which has been done by Max India to the residences for seniors, wherein we have invested in our Noida project. So this institute, the Noida project, plus we have invested in Greater Noida land, and plus the infrastructure cost what we have built in the last 3-4 years, which will get amortized on various other projects which is coming in Bangalore, Pune, and other geographies in future.
So what would be the value that would have attributed to the land parcel? That is what I wanted to know.
Approximately 60 crore rupees on the land parcel of Greater Noida. Approximately 28 to 30 crore rupees is there from principal ICD investment to our project at Sector 150 Noida, and balance comes to the corporate cost and all other amortization which will be getting amortized to other projects when we are going to develop.
Okay, all right. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Anant Mundra from My Temple Capital Advisors LLP. Please go ahead.
Yeah, good evening. Thank you for the opportunity. I just had one question. Sir, after selling all the Dehradun units, how much would be the surplus cash that will be available?
Yeah, Ajay?
Surplus cash would be approximately in the range of 120 above, 120 crores.
Okay, all right. And sir, in the Noida project, you mentioned to the previous person who asked question that our invested capital is around 30 crores. That number is correct?
28 presently, yeah, 28.
That is all in the form of equity, or there is some debt also?
Noida is a JD arrangement wherein the land is in a SPV. So we have given all the funds as an ICD to that place because in a structure we could not have bought the equity of the company.
Okay. All right. Thank you. That is all from my end. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Chaitanya Deepak Shah from Silverlight Capital. Please go ahead.
Hi, thanks for giving me the opportunity again. This is a question for Ajay. Again, just wanted some numbers on the Noida project. Now, I think when you started selling the project, I think you were starting at 7,000 rupees per square feet, and now I think you're at around 8,600. So you mentioned an IRR of 15 to 17%. So just wanted to understand, do you think that you would be revising it upwards? And also, second part of that question is what is the total value of sales that you've done till now?
Total value of sale, we have capped
yes.
As on date?
Yes. I mean, as of the presentation date.
So you can safely bet 248 units we have sold as of 30th of June. And if I give an average valuation of approximately 1.5, then we can do the math. Unfortunately, I'm using the same phone for calls, so I'm not able to do the calculation. So it's approximately 1.25 is the average, and we can just do the math. I'll get you to the approximately 500 crores of sales we have done.
Okay.
And as far as the pricing of the IRR, saying no, unfortunately, presently we do not see that because the cost of material has increased substantially from what we have modeled. So when we started the project in 2020, the model was done in 2019. From 19 to 2022, we have seen an exceptionally high price increase. Steel has gone approximately 30%, and copper and likewise everything. And actually, we have increased these prices rapidly in last 3 months to offset some of these costs and to retain the IRR which we had aspired to. While we'll be looking forward for many opportunities like that, wherein we have opportunity to raise the pricing, will certainly do so. But obviously, we'll have to be commensurate to the market conditions also. So presently, I'm keeping it conservatively 15 to 17, but all efforts will be taken by the company to maximize the IRR as good as possible.
Right, and the total investment in the project would be 28 plus 66, right? Because you mentioned something as
66 is a delta cash flow which I'll have to give to maintain a debt equity ratio. So if you remember, I had explained that 1090 in the 1090 we have sold approximately 60-70 units in the start of the project. So that's where the cash. But touchwood, the way collections are going in, these numbers can vary downwards.
So when I say IRR, my IRR would be on approximately 100 crore of capital from your side, right?
Correct.
Okay. That's very helpful. Thank you.
So the moment where there's a less investment with the same kind of equity realization I'm getting, my IRR is also always going to get improved. But today it will be too early to say.
Yeah, understood.
Thank you.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. As there are no further questions from participants, I now hand the conference over to Mr. Rajat Mehta, Managing Director, Max India Limited, for closing comments. Please go ahead.
Thank you very much. Thank you everybody for your engagement and questions. As I said, there's a trend which is playing out very clearly, and I'm seeing it from 3 angles. One, heightened interest of new players who are walking in. In the last 18 months or so, there have been 30 plus new entrants in senior care in different formats. Somebody using AI for remote monitoring, somebody doing concierge, somebody doing travel portals for seniors, somebody stepping up into residence for seniors. So different players, different formats last 18 months. Heightened investor interest. There are now investments flowing in. And we've already seen 2 such deals happening in the last few months. Heightened government interest. Policy making. The first, medical assisted living policy for assisted living got released, by Haryana government, something that we had helped them draft. There's also, NABH now talking of certification standards for care homes. So that's a necessary condition for insurers to start cover that. There is some talk of insurers now covering attendance at home. Slowly, we are seeing all the, macroeconomic factors playing out to be able to push the sector as we go forward. We are quite uniquely placed. We're the only ones with our brand playing the integrated care ecosystem. We do believe once we have a sizable population who is using one of our services, our ability to cross-sell becomes quite easy and the customer acquisition costs come down. For example, in our Gurgaon facility, all healthcare services are being provided by Antara Assisted Care. So it will happen in Noida and other communities where we'll have 600 to 1,000 residents who will need healthcare services. They'll be done by us. So more or less a captive audience. Now they will have various needs from nursing to an equipment to a diagnostic to be done. And therefore we will have all the products that are services which are needed by them. The memory care offering we're about to launch is quite unique. We also have a very eminent advisory committee we have signed up, which will announce shortly, who will help us make sure that our protocols are really best in class across the world. We do believe dementia is currently underreported in the country, and that's a big opportunity that we want to play as well. We have all the building blocks in place, as is evident from our runway in terms of financial performance, the residents, voice of customers, the growth on quarter, slowly which is now coming through, and the conversion rates we see in our care homes. So everything is pointing in the right direction. Now it's time for us to accelerate. It will still take, a couple of years more to reach the scale that we want to. And some of your questions are quite valid in terms of, trends and will we reach that scale or not. As I said, the pandemic years took away a lot of, opportunity from us. However, now it's coming back, and hopefully the trends, will improve. So thank you very much for your patient listening, and thank you very much for your questions.
Thank you, members of the management. Ladies and gentlemen, on behalf of Max India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.